Hi there traders, this is Steve Miley, the market chartist on behalf of FX Explained, and we're now going to enter the Forex Zone. This is our weekly wrap up of short-term day trade potential in here for the major currency pairs, the 6 major currency pairs, the euro versus the dollar, pound dollar, dollar CAD, Aussie, Kiwi and US dollar, Japanese yen. So we're going to kick off in here with the euro dollar, and this really highlighting in here and the main theme for the second half of this week, really since Tuesday in here through Wednesday, we're seeing a lot more weakness in here for the US dollar. So this is euro dollar higher, it's US dollar being driven by US dollar weakness. That US dollar weakness coming from poor US ISM manufacturing data that we had earlier this week on Tuesday, and then Wednesday we had trade tensions escalating into Europe, and all of that is being seen as a negative for the US dollar. Real concerns now that the Fed are going to have to cut rates again potentially into the end of this year. So that's seeing a weakening of the US dollar weakness coming from not only the global risk-off scenario, which we're previously seeing US dollar strength, but also now the contagion of a weaker US economy on the back of the weaker global economy. So that highlighting fears of the whole breakdown in the global economy, in going into maybe recessionary pressures, and all of that now seeing as a weakness for the US dollar, with, as I say, the Fed now likely to be looking to cut interest rates again. So we've seen euro dollar higher in here, driven by US dollar weakness up through this 109.67 level. Short-term risk up through 109.96 towards 110.25. Remember, today we've got the US employment reports. So there's going to be all eyes on that to see if we have any kind of indication that we're getting deteriorating employment as well. So upside risk in here for euro dollar, but really it's downside risk for the US dollar. And a similar theme in here over the last 48 hours or so, 72 hours for cable. Pound dollar higher, driven mostly by US dollar weakness. Nothing good from the Brexit side in here, but the market pushing higher because of US dollar weakness. Pound dollar higher, cable higher in here, up through this 123.81 level, having previously this week pushed down through 122.31, which signaled an intermediate term, like a longer term, an intermediate medium term bearish signal. But the rebound in here over the last 72 hours from the middle of this week, signaling upside pressures going into today, maybe up to 124.12 and even closer to maybe 125.03. Looking at dollar CAD in here, I'm a bit of an outlier in here. Dollar actually strong in here. Dollar strong versus the Canadian dollar. Obviously concerns in here for Canada being linked to the US economy in here. So US dollar, Canadian dollar higher. Also we had some weakness in oil, so that's not helping the Canadian dollar. Up through this 133.10 level. Upside risk now to this key 133.82.83 level, and a break up through there would signal an intermediate term bullish shift. Aussie and Kiwi are both higher versus the dollar, again on the back of US dollar weakness. Aussie now probing this downtrend line up to 67.59.60. Upside risk now to 67.76, 67.80.81 in here going into the day. The critical level up is up here at 68.09. So we're looking for further upside there, and similar story with the Kiwi dollar, reversing up through this downtrend line that comes from the middle of September, up through up to close to resistance here at 63.27, up to 63.26. And the critical level here is 63.49. Above there signals a base and an intermediate term bullish shift. And then finally, I'm really typifying the mood in here. Dollar yen plunging lower from the middle of the week, down from just below this 108.48 peak from 108.45. It's wiped out yesterday, this 106.93 level. That creates a double top pattern in here for dollar yen. A classic risk off move. It's not only risk off in here as in buying yen. We're also seeing obviously that dollar weakness because of concerns about contagion of the global economic slowdown into the US. The US Fed, the Fed in the US likely to be now cutting rates. So it's both US dollar weakness because of that, and then also combined with Japanese yen strength in the risk off scenario. So dollar yen lower, and all the threat lower today, 106.47, 106.32, maybe sub 106 going into the employment report today. So do watch out for that employment report in here coming up today from the US. This has been Steve Miley, the market chartist on behalf of FX Explained. You've been in the Forex Zone, and I'm going to wish you a great trading day. So traders, don't forget to catch us again on the Forex Zone, and also check out all the great content on fxexplained.co.uk.